So we prepare the profit and loss account first with all the schedules that we have written in the notes to the profit and loss account. So interest earned, schedule 13, the total we got was 925. Then other incomes, with all these different incomes, the total we got again was 300. Then the next one, we can write the total of these two first. 925 plus 300, 1225. This is our total income. Okay. Next is interest expended, schedule 15. The amount that we have is 120. Next, operating expenses, total amount 155. Now provisions and contingencies, we didn't have any other provision. There was no provision for income tax or provision for bad debts or anything of that sort. Just one provision, so we directly write it in the profit and loss account. We don't need to do a separate working note showing all those provisions deducted and then getting the profit after tax. Okay, so directly these three give us the total 690. Okay, so total income 1225, total expenditure is 690. You need to get the difference of the two in order to find out what is the profit of the current year. So income 1225 minus expenses 690. I am doing a direct calculation, no other working note. Okay. So these two deducted, you get the profit of the current year, which is 535, and previous year's profit as given in the trial balance, we have already written it here. This gives us a total of 1185. That means total profit including current and previous years is 1185. Now we have to show what is done with this 1185 under the appropriations. Okay, some of these transactions are not there in the problem, so we'll get rid of them. We have a statutory reserve transfer, it's compulsory, so you have to do it even if not given in the problem, and the remaining will be carried forward to the balance sheet. Now, how much of the profit to transfer to the statutory reserve? We generally take 20% as a sort of a uniform percentage, right? And 20% of which figure are you going to take? Of 1185, 650 or 535? As we know, statutory reserve transfer for the current year has to be on the profit of the current year, not on the total profit, not on last year's profit. Consider only the current year's profit to calculate this 20%. So it is 535. So 20% of this gives you 107. Done. So 107 is what will be transferred to the statutory reserve. Now this is one effect of the adjustment. Where else does it come? In your balance sheet, we already have written under reserves and surplus, statutory reserve opening balance. And during this year, we have not done a working note, so I will delete this. During this year, we have transferred a little more, that is 107. Okay. So amount transferred to the statutory reserve for the current year, and this is going to give us after adding 1007. Done. Then our total profits are 1185. You write them again over here. Out of this 1185, we are saying 107 is transferred to the statutory reserve. So what is the balance remaining to carry forward to the balance sheet? 1078, right? And this will also come here as 1078. Done. So in our reserves and surpluses, we have statutory reserve, previous years, current years 1007, and balance of the profit and loss, two effects. One we show it in the P&L, the other it will come here under your reserves and surpluses. Okay. So total of reserves and surpluses, will complete that as well. 1078 plus 2007 gives us 2085. This is our reserves and surplus total. Okay. So I guess with that we are done with the profit and loss account. All the figures there are done, all schedules marked, and we can now complete our balance sheet based on all the notes that we have prepared. Let's transfer. First one, capital. We look down here for all our working notes and we enter the amounts here. Capital 2000, reserves and surplus schedule 2, amount 2085, schedule 3 deposits, amount 725, borrowings schedule 4, amount 400, schedule 5 other liabilities and provisions 100. Total of all these 5310. Okay, total of all 5310. Let's see if we get the same in your asset side as well. Under assets, schedule 6 is 300. Balance with banks and short notice 400. Investments once again also 400. We're just shifting totals now at this point. Advances. So the advances, what we had done is we calculated provisions, isn't it, on each one of those categories: bills, cash credits, term loans. So we gave the provisions two effects. One was we showed it in the profit and loss account by showing it in provisions and contingencies. Second effect was minus the provision from the respective advance or respective loan. So bills purchased, their provision was this much, cash credits provision was this much, term loans was this much, and we get the final totals. So advances after minusing provisions were 2690. Fixed assets total 1470 and other assets total is 50. Okay, so this also gives you 5310. Total of all the assets is also 5310. Okay, so schedule 12, you don't have any contingent liabilities in this problem, nothing given. So here also you can just say nil. Okay, so that was the seventh problem with the P&L and the balance sheet complete in all effects, okay, along with all the working notes given to you.